I could be wrong. I'm certainly biased in favor of gold. I think we all are watching this, and certainly you and I are. But let's play the lawyer here and look at both cases. You could argue on the negative case that gold is just another asset class that tanks when the tide goes out and it's sympathetic to the markets. But even if that were true, even if you take the '08 template, it rebounded much faster than everything else. Gold, as we all know, can be used when you need to make a margin or you need to pay for the losses in your bad investments. You sell off your good investments. That may sound like an apology for gold. If you're looking at a window of more than 3 weeks or 3 months and you're thinking long term, the trend for gold and the actions, not the words, but the actions of the gold market speak so loudly that my biggest fear right now, Kai, is I have too much conviction in gold. It makes me too confident.
In the first half of 2024, gold delivered the highest returns among various investment instruments, outperforming bank deposits, currencies, foreign currency bonds, real estate, and even dividend stocks. However, gold has shown increased volatility over the past 7 days, dropping 4.4% in the last week. Additionally, the price peak in early August was lower than the record high reached in July. Matthew Piepenburg, partner at Greyerz Gold, observes that while gold might experience an initial dip during market sell-offs, it typically outperforms other assets over time. He stresses the importance of focusing on long-term trends rather than short-term fluctuations in gold's price. Despite considering different viewpoints, Piepenburg admits a bias in favor of gold, highlighting that even if it follows a pattern similar to 2008, gold has historically rebounded much more quickly than other assets. Gold prices surged following the U.S.'s abandonment of the gold standard in the early 1970s and continued to rise during the stagflation period of the late 1970s and early 1980s. After the dot-com bubble burst and the subsequent recession in the early 2000s, gold resumed its upward trend, reaching new heights following the 2008 Great Recession as the federal government introduced expansionary monetary policies. In the last 5 years alone, the weekly spot price of gold has climbed by over 70%, increasing from around $1,400 in June 2019 to more than $2,400 in July 2024. Furthermore, Piepenburg mentions that the IMF, along with the BIS, is considering using gold to back a new central bank digital currency, signaling gold's increasing importance in the global financial system. Ready to uncover more insights? Remember to subscribe and turn on notifications always to get our latest content.
Gold is very sympathetic in a market sell-off. Everything goes down in a lower tide, but comparatively it did far better. I never look at gold day to day or month to month, frankly even quarter to quarter, because I'm looking at it in a much more longer term trends. There's this guy, Henrik Zeberg, I think, out of Scandinavia, who says gold's going to go way down in the next market crash like it did in 2008. Again, I could be wrong. I'm certainly biased in favor of gold. I think we all are watching this, and certainly you and I are. But let's play the lawyer here and look at both cases. You could argue on the negative case that gold is just another asset class that tanks when the tide goes out and it's sympathetic to the markets. But even if that were true, even if you take the '08 template, it rebounded much faster than everything else. Gold, as we all know, can be used when you need to make a margin or you need to pay for the losses in your bad investments. You sell off your good investments. That may sound like an apology for gold, but more importantly, I think 2024 is very, very different than 2008. And we can get into all the kind of technical charts, and we can get into all the comps historically, but let's keep it, I think, relatively simple, because the simple stupid is so simple right now. And these are things that aren't making the headlines, but are absolutely massive in favor of where gold's longer term direction is going. And I think one of the most obvious is just the Bank of International Settlements. Not my favorite place to be, not my favorite people. If we did a show just on what the BAS does, it would make people very nervous. And they're immune from prosecution, immune from taxation. They live very well doing a lot of bad things. But even the BAS, they're politics. They're political, and they know what they see. The writing on the wall with the U.S. dollar. And just last year, which very few people understood, the BIS made gold a tier one asset. The only other tier one asset in the BIS is the U.S. Treasury. Why did that happen? It's not a coincidence, because the BIS knows what the BRICS know, that no one wants to use the dollar anymore, the U.S. Treasury, as a reserve asset. It's a liquidity asset. But to save and store value, gold has just been elevated to a tier one asset. Okay, that's a very important headline in and of itself for the longer term direction of gold, not the chart that happened in the week of August 5th. The other obvious thing is Eastern central banks. Again, since 2014, no one's been noticing. Eastern central banks in general have been net selling U.S. treasuries and net buying gold at historical records. Again, why? Why are they dumping U.S. Treasuries and buying gold and then increasing that since 2022 when we weaponized the dollar and took the FX reserves away from a major power like Russia, which is in bed with China and selling oil back and forth to each other in yuan? Why is that happening? It's not a coincidence that the world and the central banks, watch what they do, not what the pundits say, are dumping treasuries and stacking gold. You've got 30 nations in the last year and a half who've been repatriating gold out of the COMEX and the LBMA banks. Why? Because it's a tier one asset. Gold is becoming far more important as a net settlement trade asset. And so you've also got the COMEX and the LBMA banks seeing massive outflows of physical delivery because people don't want to play the churn and extend game. They want their physical assets. You've got 45 nations trading outside the US dollar. That's not going to change the FX power of the US dollar overnight, but it's a clear and obvious trend away from the US dollar. You've got the oil trade trading more and more outside of the petrodollar. Again, Saudi Arabia, the UAE, they're pegged to the dollar. They don't want to see the dollar die, but they are moving away from the dollar. The UAE and Saudi just joined the BRICS, and they're making deals with other countries to sell outside of the petrodollar. It has a massive impact on the US dollar. No one is really talking about that. The rise of the Shanghai exchange is now the third largest exchange behind the COMEX and the LBMA banks. And even the IMF, and along with the BIS, are already again talking about using gold to back the new central bank digital currency that they're going to try and unleash when things really hit the fan. These massive movements have showing, again, to Brent Johnson, I agree, the dollar will be the last to fall. I don't see it going to 150, and it will fall violently and militarily, but that's already happening.
For years, gold has been an ultimate safe haven asset to withstand economic recessions, inflation spikes, and credit risk concerns. During the pandemic, the role of gold has only increased, with investment demand reaching a 10-year high and central banks allocating a larger part of their international reserves to gold. It is becoming clear that the weaponization of the American dollar against Russia, in retaliation for the invasion of Ukraine, sent a message that was very loud and very clear, not only to the Kremlin, but to the rest of the world too. Piepenburg underscores that while the US dollar currently appears stable, the long-term trend is moving toward gold. He believes that nations like China and Russia have been planning for years to de-dollarize and accumulate gold as a hedge against the weakening dollar. The acceleration of this trend in 2022, Piepenburg argues, is not a sign of the end of the dollar, but a repricing of its value in the global economy. Now, let's redirect our attention to a video.
The dollar was weaponized in the first quarter of 2022, and the reaction was by the rest of the world that's been sick of being having the dollar be the tail that wags their sovereign dogs, whether that's in China, whether that's in Russia, whether that's in India, whether that's in Venezuela, whether in any of these BRICS nations, or frankly, even Saudi Arabia. By the way, you can't call Saudi Arabia, which is your ally, a pariah state and expect them to want to keep the petrodollar going for another 50 years. But gold is being weaponized in a way because that signal that came over the river, that first gunshot from the absolutely stupid U.S. State Department and White House at that time, and the West and NATO. Again, I'm not going to get into politics about whether Zelensky's George Washington 2.0 or whether Putin is Hitler. I don't want to live in Shanghai or Russia. I'm not a pro-Putinist. But weaponizing the world reserve currency is something John Maynard Keynes, Robert Triffin, everyone warned against, and we did it anyway. And when we weaponize the world reserve currency in 2022, of course, when you send that bullet one way, there's going to be bullets coming the other way. And the bullets coming the other way right now are hopefully for now just financial and not nuclear. But the bullets coming the other way are very simple. Okay, you're going to weaponize. You're going to be able to take an asset away at will. An asset, by the way, which is losing value because you're a debt-soaked shotgun. You're weaponizing this dollar. You're broke. You're taking things away from us, and you're giving us this choice to hold in U.S. Treasuries, which are losing to inflation and losing value every day, gold, over something that has a finite duration and infinite supply, the U.S. Treasury. I think my gold holds its value far better than U.S. Treasury. So the world is now stacking gold. That's not an argument. That is a mathematical, empirical fact. Again, look what the world is doing. So in a way, gold is being defended. It is being used as a defense against a weaponized U.S. dollar. And as I said in 2022, when I wrote How the West Was Lost, this was the day after we weaponized the dollar. I said, this is going to end badly. I wasn't alone. Grant Williams, Jim Rickards, War College at Carlisle, Pennsylvania saw this was a dangerous tactic. We did it anyway because we have mental midgets thinking short term, to Hernick's point, instead of long term. But yeah, when we weaponize the dollar, the reaction from Russia and China and Saudi Arabia and Latin America is, we're going to go to something else to store our value. And the Bank of International Settlements is recognizing that. The IMF is recognizing that. And so, yeah, we're defending against a weaponized dollar by building a moat of physical gold. Because we see where the hockey, as Wayne Gretzky would say, the hockey puck is going, not where it's sitting. I say the polo ball because I like polo, but it's a wanker sport. But the point is, the truth is, the BRICS and the rest of the world are playing where the ball is headed, not where it's sitting right now. The U.S. dollar is sitting, quote unquote, pretty right now, but gold is the direction it's going. And so it is being weaponized, Kai, in a lot of ways, as a defense, not as an aggression. But believe me, China and Russia, this is not plan B. They've been waiting for years as plan A to slowly de-dollarize and get away. And why do you think they're stacking gold at all-time records? So believe me, the World Gold Council's understanding of what China holds in gold or Russia holds in gold or what the U.S. holds in gold, because we haven't had an audit in decades, is completely inaccurate. That may sound sensational. Be very careful when the world slowly and then suddenly, like Biden's mental state, slowly then suddenly becomes obvious. Be very careful when gold, not just by the BIS or the IMF, as a reserve asset, as a tier one asset, becomes the core reserve asset. And again, it already is happening. It's not even something I'm predicting. It's happening as we speak. It's happening right now. And that's the direction of the hockey puck. That's how you play hockey. You go where it's going. I'm going to gold because that's where it's been going for years. 2022 just accelerated that pace. And again, not the end of the dollar, just a repriced dollar.
Gold has been making headlines in the financial press for quite some time now, thanks to its stellar performance. Since October 2023, the price of gold has been making robust gains, hitting an all-time high of $2,480 per ounce on July 17th. This is a significant jump from its previous record of $2,075, set in August 2020, amid the pandemic-induced uncertainty and consequent safe haven demand. Forecasts for the end of December 2024 range from $2,340 to $2,400 per ounce, corresponding to 6,940 to 7,270 rubles per gram, indicating a growth potential of 7 to 12%. The heightened interest in gold is being driven by panic over the possibility of a U.S. recession. What is your stance? We welcome your insights in the comments section below. If you found this content valuable, don't hesitate to give it a thumbs up, and don't forget to subscribe to stay informed. Thank you for joining us on this journey.